Joining us now, Jayakumar, MD at Prime Securities, joining us. Mr. Jayakumar, your first take with regard to the budget, especially with regard to the fiscal situation, the gross borrowing number. What do you make of that number? Because you will likely see a reaction to that number this morning on bond yields.
Yes, I think that number did initially spook people, but I believe there is flexibility available. It could, to my mind, promote some kind of fear, if you will, that yields could inch up. But I think that could be a short-term kind of move. My own assessment is that the budget in general has been conservative on most estimates. The borrowings, I think, may not come in at those levels, or there may be some RBI action which essentially makes sure that the yields don't go up to those levels. A few basis points this morning, perhaps, but I think that will get, in that sense, bought into as far as bonds are concerned.
Jakes, the RBI, MPC is meeting this week. Do you think that there will be measures to ensure that there's enough liquidity and, a status quo with respect to maintaining the yields at current levels?
Absolutely no question about it. If anything, I believe that the number may include some swaps which the RBI could do, and that's why I feel that the RBI's sort of focus on inflation, while that has been the sort of focus for a while, but on ample liquidity is an equally important focus. And I think there will be more than adequate liquidity that will come through. It was already preambled, if you will, from a budget perspective, because they announced measures a week ago, and they'll be there for more if required. So I don't think liquidity is an issue, and I'm not sure if the inch up in yields this morning will be sustained.
Jakes, if you look at the capex numbers, they are pretty much in line or little ahead of the street estimates, especially defense one coming at 18%. You have nearly 8% railway capex, 10%. Then you have roads at 8%, railway at around 10-11%, and overall capex jumped to 12.2%. The theme of capex is continuing for us, and government is pushing the pedal as far as public sector capital expenditure is concerned. Do you think private sector will now come in, because we're seeing some green shoots happening to some of the numbers that came in from Q3?
I think private sector has been coming in, albeit not at the same pace that the government has wanted. I think the government push now will be a lot less than what it was last few budgets, and I think private sector will step in. Liquidity is ample. Measures have been made by RBI, including things like foreign money for acquisitions and so on and so forth. So liquidity under multiple heads will come through, and I think private sector. I'm not sure if it will unleash, as they say, the animal spirits, but definitely they are more prone to making investments now than they were 2 years ago.
No, sure. Thank you so much for coming in and speaking with us, of course. But that clarification was just something that I was trying to kind of get as to whether that impacts our markets at all.
I don't think
but
it
thanks
does.
so much for coming in and speaking with us.
Thank you.